Why trial balance matches even when accounts are wrong? Imagine you have completed all the accounting entries, prepared the trial balance, and finally the totals match perfectly. You feel relieved and think, great, everything is correct. But here is the shocking truth of accounting. Even if the trial balance matches perfectly, there can still be serious mistakes in the books of accounts. Yes, the trial balance only checks one thing, whether the total debit equals total credit. In today's video, I will explain why trial balance can match even when errors exist, and we will understand the types of errors that trial balance cannot detect. To begin, let's understand the basic concepts of trial balance. Trial balance contains various ledger balances on a particular date. It forms the basis for preparing the financial statements like profit and loss account and balance sheet. It ensures that total debit is equal to total credit. However, the trial balance cannot guarantee the accounts are completely correct, because if an error affects both the debit and credit sides equally, the trial balance will still agree. Therefore, it is very important to carefully journalize and post the entries following the rules of accounting. Now, let's look at the types of errors not detected by trial balance. In accounting, these errors are broadly classified into two categories. Number 1, errors of principle, and number 2, clerical errors. Clerical errors are further divided into different types like errors of omission, errors of commission, and compensating errors. Let us understand each of them with simple examples. Errors of principle. Errors of principle occur when accounting principles are not followed correctly. This means the transaction is recorded in the wrong type of account, even though the debit and credit amounts are correct. In such cases, trial balance will agree. Let's take an example. Suppose a business purchases a computer for rupees 40,000 rupees. The correct accounting entry would be debit computer account rupees 40,000, credit cash account rupees 40,000. But the accountant records an incorrect entry as debit purchase account rupees 40,000 and credit cash account rupees 40,000. Here the computer, which is an asset, is wrongly treated as a purchase expense. This violates an accounting principle. But notice something important. Debit is equal to credit is equal to rupees 40,000. So, the trial balance still matches even though the accounting treatment is wrong. This type of mistake falls under the errors of principle. Here, the rectification entry to be passed would be debit computer account rupees 40,000 and credit purchase account rupees 40,000. Next, let's understand the clerical errors. Clerical errors happen due to mistakes in recording or posting transactions. As we know, these are of three basic types. First is errors of omission. This occurs when a transaction is completely or partially omitted from the books of accounts. Examples would be not recording a credit purchase of equipments or not posting an entry into the ledger. Imagine goods sold for rupees 15,000, but the transaction is not recorded at all. Since nothing is recorded, debit is equal to 0 and credit is equal to 0. So, the trial balance still agrees. Correct entry would be debit cash account, credit sales account. And the rectification entry for this would obviously be the same, that is debit cash account rupees 15,000 and credit sales account rupees 15,000. Next is errors of commission. This happens when the correct entry is made but with some clerical mistake. If an amount is posted in the wrong account or the totals are wrong, it will be a case of errors of commission. Assume goods sold to Rahul for rupees 5,000, but the entry is posted to Rohit's account wrongly instead of Rahul's account. The amount and sides are correct, but the wrong data account is used. The trial balance will still match. The rectification entry would be debit Rahul's account rupees 5,000 and credit Rohit's account rupees 5,000. Next is compensating errors. Sometimes two or more errors cancel each other. These are called compensating errors. For example, sales account is understated by rupees 1,000 and the purchases account is also understated by rupees 1,000. In this case, one error offsets the other. As a result, the trial balance still agrees. So, remember this important concept. A trial balance matching does not mean the accounts are completely correct. It only confirms one thing: total debit is equal to total credit. That is why accountants must carefully review the ledger and financial records to detect these hidden errors. Let's now check the trial balance prepared initially and incorporate the rectification entries. In our sample case, we have these 4 rectification entries. With the first rectification entry, computer account will increase by rupees 40,000 and the purchase account will reduce by the same amount. With the second rectification entry, cash account will increase by rupees 15,000 and the sales account will increase by the same amount. Now let's do the third rectification entry. With the third rectification entry, Rahul's account will increase by rupees 5,000 and Rohit's account will decrease by the same amount. With the fourth rectification entry, purchase account will increase by rupees 1,000 and the sales account will increase by the same amount. After all the rectifications, we get this corrected trial balance. Thus, we need to check the accounts and ledger postings thoroughly before considering a trial balance as correct. If you are a commerce student or preparing for accounting exams or job interviews, understanding these errors is extremely important. Hope you have understood these basic concepts. If you want more simple and practical explanations of accounting concepts, make sure to subscribe to InfoCraze. With this, we come to the end of this video. If this video was useful, please like the same and share it with your friends. Thanks for watching.